So in this video, it is time to take a look at the rising wedge pattern. And this is a very useful and also a popular pattern, but it can be a bit tricky to spot sometimes. And there are a few things that are very important to know about this pattern. So that is what this video is going to be about. In this video, we will take a look at both the rising wedge pattern when it acts as a reversal, as you can see right here. But this pattern can also act as a continuation pattern, as you can see right here. And we will talk about both of these and also take a look at some real-life examples. Now we are soon ready to start, but real quick before that, I just have to give a disclaimer that this video is for educational purposes only, and nothing in this video is financial advice. Alright, so the rising wedge pattern, what is it? Well, first of all, we can say that it is a bearish pattern, meaning that the goal of this pattern is to break to the downside, as you can see both in the case when it acts as a reversal and also in the case when it acts as a continuation pattern. And we will return to this very soon, but right now let's just realize that we are talking about a bearish pattern. And the main principle of this pattern is that in this pattern we are creating both consecutive higher highs. So we have one high, higher high, higher high, but at the same time you can see we're printing higher lows. So it's very common to look at this one in the beginning and think that this is actually a bullish pattern because it slopes upward. But the thing about this pattern is that in a healthy uptrend that looks something like this, we usually want the swings to be about the same size. So as you can see, this is a healthy trend when we have one leg that is around the same size as the second leg, and so on and so on. But the thing about this pattern is that the buyers are sort of getting exhausted. So as you can see, for every high here, we're just printing a slightly higher high. So the buyers are getting tired here and sort of fails to continue the trend here to the upside. This is an early warning for traders that we might see a reversal coming soon. You can see the same principle appears when we see it in a downtrend. We're printing highs, consecutive higher highs and higher lows. But the slope of the resistance line, so the slope of this line is not as steep as the slope of the support line. But alright guys, so now let's take a look at the two different types of rising wedges. One is when the rising wedge appear at the top of a trend. So in this case, prior to the pattern, we had an uptrend. Then we have the actual pattern appearing right here, and the goal of this pattern is to reverse to the downside. In this case, we call it a reversal pattern, but the rising wedge can also be a continuation pattern right here. And by continuation pattern, we basically mean that the pattern is a continuation of the actual trend. So in this case, prior to the pattern, we are already trending down, and this pattern basically just indicates a continuation here to the downside. But alright guys, so now let's take a look at some entry levels. So where do you actually take the trade? Where are some good places to enter here? And to show this, I think it's best to take a look at some real-life examples. Alright, so right here we have the Bitcoin chart on a daily time frame. And by the way, you can use this pattern on, pretty much all time frames. However, it might make a bit more sense on the larger time frames when we have not as much noise, but it works on all time frames. And the first way to enter this pattern is to simply enter on the breakout. For example, you can enter when you see the first candle close below the upsloping support line. So in this case for Bitcoin, you would have entered right here. But as many times in trading, different traders have different risk tolerance and risk profiles. So some traders would probably want to wait for at least one, maybe 2 or 3 confirmation candles. So that is candles that closes and trades below the upsloping support line. Another way to enter this pattern is, as always, you can try to wait for a pullback. So in this case, you can see we had the first force down here, but then the price actually pulled back. So some traders will try to find a level on the pullback here and enter. One way to do this is that you can try to wait for the continuation of the upsloping white line. However, many times this is not a good option because this line is so steep, so many times the price won't go all the way up here again. As you can see in this example, Bitcoin never reached up to the white line. So if you would have waited for that, you would have never gotten into the trade. So some traders might look for some other levels here on the pattern. So maybe your strategy here is to look at, you know, where did we break out? So we broke out right here, and then take a short trade when you reach this level once again. So when the pullback reaches up here. But there are definitely room here for, you know, lots of different strategies depending on your own trading style. But how about profit targets? When we have actually entered the trade, where do we exit the trade? Let's once again jump back into the chart and take a look at some strategies you can use to take profits. One method you can use, which is a very straightforward method, is that you use the 100% measure move. So in this case, you can measure how large is the wedge. You take the length of this measurement and then you measure here from the breakout. So in this case, your goal would be to reach all the way down here. And in this case, it actually made more sense because if we look left here, we can see that this level was a previous all-time high. So this was a previous resistance, and many times this is a potential flip to become support in the future. So this was one way to take a target here. Another target could be that your target is the low of the structure. So in this case, we have the very low of the structure right here, and you would have taken profits a bit earlier. It's pretty much many times it's pretty much at the same level. Or sometimes you can just simply use a risk to reward ratio. So let's say that your stop loss was just above the all-time high here. Let's just say that, and you want a risk reward ratio of 2, then you would have your target all the way down here. So in this case, you basically use, okay, so where is my stop loss? It is up here, and then we take basically our target at 2 times our stop loss level. All right, so in this case, we're looking at the other type of rising wedge, and this is a continuation pattern. As you can see here, we have a downtrend, the pattern appears, and then the trend continues here to the downside. And in this case, when it comes to profit targets, you can, of course, as always, you can use the 100% measure move. It looks like this would have been a pretty nice target in this case. So the 100% measure move was almost, this was actually pretty much perfect right here. So in this case, we would have gotten an absolutely perfect trade. But in my opinion, when we have a continuation pattern, it is a bit easier to find the target levels. One very clean target, in my opinion, is to basically lock in some profits here at the very low of the structure, so a bit higher. And this is usually, a bit safer because sometimes we don't hit the 100% measure move. So taking earlier profits can sometimes be, better. But all right, guys, that's pretty much it for this video. If you feel like you got any kind of help or value, then please consider dropping a like. And if you guys are interested in more, then don't hesitate to subscribe and hit that notification bell. I hope you guys have an awesome day, and I hope I will see you guys in the next video. But for now, guys, take care. Ciao, ciao.